Hi, this is Andy Hoffman, Media Director of Miles Franklin Precious Metals, celebrating our 25th anniversary, which of course I mentioned last week, but this week there's a lot more to talk about as we're doing some online surveys where you can get into a raffle to win some quarter-ounce gold eagles and also some silver eagles. And both Andy Schechtman, our president, and myself will be doing a presentation, a free dinner presentation in Minneapolis on April 8th. So if you're in the area, please give us a call. But more importantly than the celebration itself is the fact that we made it this long. Because again, this is an unregulated industry, and we've been around 25 years, and we do have a plus rating with the Better Business Bureau, which is fantastic, and not a single customer complaint in all that time. But still, it's an unregulated industry, and if there were complaints, there's not much people could do about it other than to sue us. And I write this because, in the past year, it's been a very difficult business environment. It seems ironic because we've had worldwide the largest ever physical demand for gold and silver. Even the U.S. Mint had record silver eagle sales last year. But again, I'm telling you, it wasn't Americans and Canadians who were buying them. It was the Chinese, because 2013 was a very, very difficult time for our industry across the board. Many of our competitors didn't survive, and many of them didn't survive because they're being sued for trying to push very high margin numismatic products instead of the bullion coins. Because again, when the bullion business is down, you do things to survive, and a lot of our competitors have been trying to sell those high margin products, which in my view, for the most part, are like baseball cards. They have a very subjective value to them, and if you don't know what you're doing, there's a good chance you're going to lose money. But more importantly, or equally importantly, we've seen over the years a couple of competitors when business was very strong do these very, very low margin, high volume businesses where they pretty much sell for nothing. And when there's a lot of business, they survive, and it really brings down margins for everyone. Well, the number one player in this business, which by the way, 20 years ago I think was shut down for fraud or something like that. Tolving has been doing this for years, and it looks like as of this week they've just been closed down because they've had like hundreds and hundreds of complaints for non-delivery, and I know it's for this very reason. They've been selling out of inventory with very low margins, and they basically ran out of money. And so it's a warning to anyone that's been around that thinks that you can get something for free. There's no such thing as something for free, and hopefully you're not one of the people who's waiting for your coins from Tolving, because you're probably never going to get them. Here at Miles Franklin, we have overhead we have to pay for, including this blog, which is probably the I think the best one in the industry, and it's completely free. And so look, we're gonna continue to give you the best service around, and we're going to be competitive with prices, but we're not giving anything away. And hopefully this year serves to show people that nothing is free in this business. Well, anyway, this week a lot to report. I'm not going to give the dignity of starting today with today's ridiculous NFP report. I mean, I've talked about these reports for years, how fraudulent they are, and the agenda that the people who put them out have to mess around with markets and perceptions. I'll get to that in a second. But for those who are fearing that the economy is getting better, have no fear, because I'm going to go across where the entire world is, and I think you'll understand that even propaganda that they try to put out today is going to be comically laughed at. Let's start with China. Okay, China, where today, by the way, the first ever corporate bond default occurred, as clearly that the government realizes that a strategy of bailing out its trillions of shadow loans is not going to work, and is very ominous going forward. You saw the composite PMI index come out a day or two ago at 49.6 for February. Now, this was the second lowest level ever. The first was July of 2013, just a few months ago, at 49.5. So basically, China's been dead in the water for nearly a year. And frankly, these numbers in the 40s are contractionary. So think about when the peak was back in 2008 or so, when it was around 58, this reading. And by the way, that's when their stock market was 3 times higher than it is now. So clearly, China, the growth engine of the world, is not doing that well, especially if all these loans are going to start to default. And comically, the PBOC and the government came out and this week gave their official forecast that GDP growth will be 7.5% for 2014 compared to 7.7% last year. And I'm saying, how on earth can you say that you're having any growth, let alone 7% growth, if the underlying readings are showing a contraction? I mean, even the PBOC has admitted that the data that they put out can be flawed, but this is just ridiculous. And another example of what I wrote today, walking the tightrope of trying to convince people of a reality that makes absolutely no sense at all. Now in Japan, you had no significant data this week, but now we're only 3 weeks from the national sales tax increasing from 5% to 8%. And then next fall, it's going to go to 10%. I mean, this is catastrophic for the nation. Back in 96, when they went from 3% to 5%, you had a 2-year recession thereafter, and that was the good times. That was the great times in the late 90s. Of course, back then, of note, and I wrote about this in a piece called Japan, the Noose is Tightening, there was a big surge in spending right before the sales tax increase. And from what I'm reading here, they've had a surge in spending here, except I don't see it because they just reported that GDP was up only 0.25% in the fourth quarter. So if it's that bad now, think about what it's going to be when the sales tax really increases. And keep in mind that we're halfway into Abenomics right now, where they're doubling the money supply in 2 years. Next year, it'll be double what it was last year, and nothing is happening, and the sales tax is dramatically increasing. So I would expect another round of Abenomics to come. And there's no surprise that even with the dollar index at multi-year lows, it's below 80 right now. The yen continues to fall, no matter how much they try to, continues to fall. And I think I wrote a piece, the real yen bomb starts now. And I think that, there's a good chance that the yen really, really collapses and we see some hyperinflationary signs start to emerge in the next year or two. Now, in Europe, we saw no new data this week. But I mean, let's face it, they just announced 4Q GDP was just up 0.3%, essentially record high unemployment. The youth unemployment is really taking off there. And that's why I was surprised the ECB didn't lower rates at yesterday's meeting. But let's face it, they're already at just 0.25% on their rate. And typically, central banks don't like to lower rates unless markets are falling. They like to have, quote, ammo to say, well, we're doing something to make things better. The fact is, people have been buying because they think that the ECB is going to keep printing money. And that's what's so ironic about it. But look, they'll lower it from 0.25% to 0, and they'll kowtow to the IMF, which is begging to do it. And now that the German Constitutional Court has essentially said the OMT is constitutional, or they just won't talk about it. They'll just say, fine, you do it if you want to do it. I think that's coming later this year, no doubt. Then you have the Bank of England, which Mark Carney, former Goldman Sachs guy who runs it, just like Draghi, former Goldman Sachs, kept rates at 0.5%, which is essentially zero for the 6th year in a row. But they said that the economy is very strong. They're like the Fed, they're in no hurry to change rates and raise them, but the economy is very strong. Yes, and they also have the highest inflation in all of Europe, but that doesn't seem to matter to the 99% of the people, right? Here in the United States, where we had this, quote, strong number today, which I'll get to in a second, which was not strong at all. Monday, February construction spending flat. Wednesday, the ADP report, and again, I've talked about the ADP report ad nauseum. Just like the weekly jobless claims number, no one could care less about that report up until maybe, I don't know, a year or two ago when it became what I call a key attack event. Both for the PPT, looking for excuses to goose the stock market, and of course for the cartel, looking for reasons to hit gold. I mean, anytime there is any report that's better than expected, even if it's complete bull, like today's, they have the algos out in full force, smashing gold within seconds and silver, and of course taking up the Dow, which is now trading with the lowest amount of bears in the history of the Dow. Maybe in 1929. There were less bears, but considering how bad the economy is and how bad the world is, that's quite a statistic. And you can blame it on, again, on inflationary expectations and the PPT and the Fed's money printing, of course. Now, the ADP report yesterday was only 139,000 versus the 160,000 estimate. But more importantly, the January number was reduced from 175 to 127,000, and they also dramatically reduced November and December. Now, again, if anyone recalls, maybe a year and a half ago, ADP recalculated numbers going back years saying that they had overestimated everything. I mean, it's a joke that their job is counting payrolls and they do such a bad job at it. But then again, who's to say that it's any better or worse than the BLS, who badly fudges their numbers? Who's the one that's more right and more wrong? The fact is, there's never been any real correlation between the two. That's how far off these two are. That's how much they both massage their numbers to the point where they don't make sense anymore. I mean, my God, the BLS now counts a part-time job the same as a full-time job, and of course they count a minimum wage job the same as a manufacturing job. So they're not even real jobs to start with, and then BLS has its birth-death model and seasonal adjustments and whatever the heck they want. They could have made today plus 175, minus 175, you name it. But anyway, as for ADP, it was a complete misery on Wednesday. The PMI Services Index Wednesday was also Wednesday, 56.7 in January, down to 53.3 in February. More importantly, the ISM non-manufacturing services survey went from 54 in January to 51.6 in February, which, by the way, was the lowest reading in 4 years. But not only was it the lowest reading in 4 years, but the worst component was its employment component. In fact, it was so bad, it was such a big plunge that it predicted, and you could see the chart on Zero Hedge, a negative jobs number today from the NFP. That's how bad it was. And believe me, if you see that chart, you'll see that there's been a huge correlation between the employment component of the ISM non-manufacturing and the NFP, because of course we have no manufacturing jobs anymore. But that's what makes it even more comical. And of course, then they followed that up with yesterday. Janet Yellen came out and said the economy is operating well below the Fed's target rates. I'll do anything I can to improve the economy. Bill Dudley, New York Fed president, came out also yesterday morning and again this morning. Again, another former Goldman Sachs guy, and said also, yes, the economy is well below where it should be, and we have no intention of raising rates anytime soon. So that's where we come to today's NFP report. And again, going into the report, I wrote yesterday, I said, look, they have an agenda. They'll do whatever they want. They'll make it a high number, a low number. They can seasonally adjust it, birth, death, put it whatever they want. And, there's many reasons why they needed to get this number, quote, better than expected. For one, gold and silver, after a year of being smashed down, especially after last April's big smashes, the alternative currencies destruction, they were below their 200-day moving averages for a year. Finally, last month, they crossed above them, and they retested them several times. And now we're within probably a week or two of the what's called golden cross occurring, when the 50-day moving average moves above the 200, which a lot of traders find very bullish and could lead to a big rally. So you have that going on. You also had the last two NFP reports were absolutely horrible. And remember, just 10 days from now is Janet Yellen's first FOMC meeting as the Fed chairman. And the last thing that she needs, especially if something bad happens in the Ukraine, making markets go into a panic, is to have to come out in her first meeting after saying, yes, the plan is tapering, etc., say, yeah, you know what, we might have to pause the tapering or maybe even turn it around. So there were a lot of reasons for this agenda to be messed around with. Now, on top of that, I said, going into the meeting, I said, look, does anyone remember the 1.3 million people who lost whose long-term unemployment benefits expired at the end of December? How come they have yet to be taken out of the labor force? It's amazing. I mean, the 6.6% or 6.7% where we are unemployment rate should be printing right now below 6% because of these people. But amazingly, they just don't seem to be taken out. Neither do a lot of remember, there's 3.6 million other people whose long-term unemployment benefits are going to expire this year. And those people also are going to be coming out of labor force unless they get jobs. And at the rate jobs have been created, they're not going to get any. So these people at some point have to be taken out too, and have not been taken out. It's no different than the comics, which day after day now you look up and there's still 640,000 ounces in registered gold inventories. I mean, there's still 100,000 ounces that have stood for delivery from the December and January contracts, which haven't been delivered yet, and now another 400,000 or so from the February contract that's expired. And again, they don't get delivered. I mean, how dumb are we? How dumb do they think we are that the inventories don't go down even though people are claiming delivery? This is a default. And it's the same thing with trying to report a labor participation not changing when it's clear that people have left the labor force. And what I've posited over the last few weeks is that if you remember back last June when they started talking about, yeah, maybe we'll start tapering if things get better. They said if the unemployment rate falls below 6.5%, and I think back then it was in the high sevens, we will consider tapering. We will consider raising interest rates from the zero where they are now. Well, it got down to 6.6% last month, and I think that they've said, look, we can't let it go below that level because it'll just make the Fed look stupid. Even though right now I'm saying it should be below 6, and if those 3.5 million people, if a bunch of them don't get jobs this year, it could end this year in the fours. Even because the Fed didn't realize that it can go down with all the people losing jobs, not gaining jobs. In fact, even today, where they announced 175,000 new jobs, they said the unemployment rate actually went up from 6.6 to 6.7. How can that possibly be? It just shows you how much they're fudging the data. Now, um, aside from the fact that again they announced 175,000 new jobs today for February versus the estimate of 152. Now, aside from that being on an absolute basis not even that much of a beat versus expectations, and certainly not statistically significant, as usual, the quality of the jobs, I mean, this is every month, was terrible. I mean, more than half of the jobs, 95,000 of them, were government temp agencies, education, and hospitality leisure, i.e. waiters and bartenders, and all of the jobs, no one ever seems to talk about this, were in the 55 plus age category. And I'm talking about 250,000 jobs this month were created in the 55 plus age category, while the rest of the people had a huge decline in jobs. And believe me, you don't need to believe me. I mean, anyone who's over 55 getting a new job is probably someone who is getting a minimum wage job because they're retired or near the end of their career, and they can't afford retirement, so they're going in and taking those minimum wage jobs from the younger people who need to start building savings or even to support a family. So it just shows you just how bad the actual quality of jobs is. And then, of course, you throw in the 124,000 that came from the birth-death model and whatever seasonal adjustments, and you realize there really weren't any jobs to start with. They just kind of literally made the number up. By the way, average weekly earnings fell to their lowest growth rate since the Lehman debacle. Real disposable income is at a 50-year low. So again, they can report that there's 10 million new jobs. But the fact is, whether those jobs are even real or not, what's there is simply minimum wage jobs. End of story. A lot of them are part-time jobs. A lot of them are part-time minimum wage jobs. And of course, when it came out, the Dow rocketed up 50 points, and gold was down nearly $20 in seconds, and I mean seconds, and silver 70 cents in seconds. As usual, the 3x beta on gold for no reason. I mean, silver, aside from its monetary properties, and as I wrote yesterday in our piece Silver Anniversary, which I'll get to in a second, where there's huge demand, is the second most widely used industrial commodity in the world after oil. And yet we're supposed to believe it fell 3% in seconds. And again, this is just seconds after the minutes after the COMEX open. I mean, just ridiculous. They both come back right now. The Dow is just barely negative. They're trying to hold it, even though Europe has been plummeting in the afternoon. And gold is sitting right under 1340, down $11 for the day, and silver is right under 21. Down 50 cents for the day. They have their little lines in the sand because they need the MSM to say precious metals down because of strong labor data. But the fact is, this was just planned all week. And, all it's going to do is increase the demand. As I wrote in that piece, Silver Anniversary, yesterday, the U.S. Mint is actually, as I said, so 2013 was a record year for Silver Eagle sales. And 2014, in the first 2+ months, is going to shatter that record. But not only that, it's going to do so even though they've been rationing. They've clearly been rationing, and we've never seen the U.S. Mint rationing Silver Eagles in a non-crisis period. It's something like 1.2 million a week now. They've even had a couple weeks where they weren't selling this year. So, we're supposed to believe that demand just fell in seconds by 70 cents because of a bogus report. No, all it's going to do is going to create more physical demand. And that's why I, myself personally, this week alone, have sold a bunch of gold to buy silver with it. I think maybe 18 months ago, I probably was at 65% gold, 35 silver, and now more like half and half. I think the gold silver ratio has never been more ridiculous between the fundamentals and both metals trading below the cost of production, particularly silver. And so I think this is a good time to make that trade. I think you should own some of each, but I certainly believe the gold silver ratio is absolutely ridiculous right now. And then, of course, there's the Ukraine. I mean, this is a major event. Anyone who says otherwise has an agenda. What's going on right now? Again, a third of the natural gas in Europe, or a quarter of it, comes from the Ukraine, or comes from Russia, and a lot of it comes through the Ukraine pipelines. Putin is not backing down. I mean, the fact when they came out on Tuesday and goosed the Dow and smashed precious metals and said it's because Putin was softening his stance. That was what the term was. I mean, that was just ridiculous. He didn't soften it. There was not a single thing that happened this week that was softening. In fact, the Crimea, they're part of the Ukraine, but they're kind of autonomous, and they have their own government. They propose to join Russia, and I think they're going to vote on it next week. And Putin has shot ICBMs to warn us that we're still there, that he's serious, and he's tripled his troops during the week there. And he's pretty much said, if you sanction us, we will cut you off completely at the knees. So there is no softening of the stance in Ukraine. And, this may well be the black swan that kills the cartel and the fiat currency system. And maybe it won't be. Maybe it'll be something else. Maybe the Fed will do it itself, or maybe something in Europe. But trust me, something is going to happen. And that's why at the current prices, it's never been a smarter time to protect yourself with physical precious metals, and to do it with someone who's reputable as we are. Well, I hope this helps. If you have any questions, you can email me at ahoffman@milesfranklin.com, or give us a call at 800-822-8080. Thanks, and have a great weekend.